start with the latest rethinking around the Fed, because we've seen markets respond to this in the last few days, haven't we? A sort of rethink of the Fed's pivot in December. Did the markets get too carried away? I suppose one question that stands out to me is whether the Fed wants to see tightening of financial conditions, whether they'll be happy to see stocks retreat a little bit, because then that means the Fed doesn't have to step up and tighten those conditions themselves.
I think they will be happy with a little bit of tightening of financial conditions. I think, unfortunately, though, the Fed has lost control of the narrative. They were just so premature. In December, repeating the mistake of 2021 by being just way too easy in monetary policy terms relative to the strength of the economy means they're losing credibility. They've lost control of the narrative. And what we saw this week was a concession by Powell even that they have lost control of the narrative. So really, what we've seen in the last kind of couple of months is that the market got way ahead of the Fed as well. The market has kind of admitted that the data was too strong. Now the Fed's admitting the data is too strong. Both the Fed and the markets are being bullied by the data here, and the data is saying there is no chance of a rate cut anytime soon unless things change drastically. And there is no hints on the horizon that there is any kind of crisis brewing. Obviously, things can change, but they're not going to change in next week. We need a whole string of data to change the narrative. So for now, the direction of travel for yields is still higher.
Yeah, it seems precisely 3 inflation prints to change the narrative. That's perhaps what we've learned as well over the last few weeks. So with that in mind then, Mark, the dollar has been continuing to rise, dollar strength, the big talking point, yen weakness in other currencies as well, of course. But that has put the yen in focus over a period. And we watched overnight as we see stories around maybe the US tolerating yen intervention. How does that set us up for next week when we get to the next BOJ?
Look, I think the BOJ is going to get increasingly err on the hawkish side. I think what's the interesting narrative this year is that we're going to have in 2024 the BOJ move rates by more than the Fed. That seemed kind of fantastical at the start of the year when you're pricing in more than 6 rate cuts from the Fed. And the idea that the BOJ was an active central bank was still kind of a pipe dream. But it looks like the BOJ is probably going to hike rates a couple of more times this year. And obviously this yen weakness is going to kind of force them even more likely into kind of action. So I think the risk going to next week's BOJ is it's slightly live, and the risk is it's hawkish turn.